Hello guys, welcome to another video. So in this video we'll be going straight to analyze Gbpusd, and I will go from higher time frame to the lower time frame, probably 1 hour or 4 hours, to see what Gbpusd is likely to do in this coming week. And I'll start my analysis from daily time frame. So this is the daily time frame. I think D1. This is the daily time frame. So from this, as you can see, this is what we are looking at in the overall. And in my last video, we actually did a breakdown analysis from this level up to this current situation. So let me just mark out, because this is just the obvious level that we can see that the market breaks structure. So if you look at it, market broke the structure from this level in the higher time frame. Then after we had a break of structure, what are we going to look out for? Look for the last pullback that the market created before breaking the structure. So as you can see, this candle is where the market broke the structure from. So let me adjust it so that, okay, so the market close above here. You can see we use candle close, not just the wick. So we use candle close. So after that, market came back from this liquidity, which is all we need to confirm our break of structure. So we need inducement. So, and I want you guys to understand that when you are doing your analysis, technical analysis is about perspective. So what I see that works for me might not work for other people. So, and we might also be naming it different name, but it's still the same thing we are talking about. So don't be confused by the name. So it's just about the perspective that I have for the market. So whenever I want to confirm my break of structure, my break of structure must contain at least an inducement. So, and I understand that a lot of people um, use inducements as it suits them. So for me, let me just recap. If the market is going up like this last pullback serve as my inducement. If the market push down and refuse to take it and push up, I did not have, this is not my valid break of structure. So all I want to see is I want the market to come down, at least take one of these. Then if the market now push up, then that's when I have break of structure. So that's the way I view the market. So, and that's exactly how I analyze from the higher time frame to the lower time frame. So as you can see, we have a break of structure again here. So it means that this is our low. Our low will be resting here. So anything below here, it means that we had change of character in a daily time frame. So now, what are we going to look out for? You can see that after we break the structure to this high, market created pullback. This is supposed to be our last pullback, but market created another one. Then finally market created another one. I think I've explained this in my last video, and we're supposed to have a break of structure here because it met all our break of structure criteria. But the problem is, as the market is going to go and break the structure, market do not create any value pullback like this. As the market is going like this, we're expecting a pullback, then this low will now be confirmed that it will be our low. But as that one doesn't happen, it means that we are not having a break of structure yet, because no valid break of structure, no inducement created by the market. As you can see, after break of this structure, market created an inducement, or as you can see from here, pull up, pull down, and so on. So market was creating a valid pullback for us that we can use as an inducement. Finally, it came back for it. But in this situation, market do not do that. So it means that we are going to shift this inducement, and market close up. So it means that we are shifting this, it means that we're shifting this level to this level. So we'll take this level, this inducement to this level because that's the last low that the market ever created. So in a real sense, this is like what we are having. So in the real structure, so and we are expecting the market to respect this low whichever way. So but as you can see, market did exactly like that. That's how a lot of people will get trapped. Look at it in daily time frame. I'm not talking about what happened in 4 hours or in higher or lower time frame. I'm being specific with how I perceive um, my daily time frame structure. So, and a lot of people do mistake when they do analysis on one particular time frame. They will expect that same analysis to happen in another time frame. No, you stay to your time frame, hold on to your time frame. You might have a valid break of structure in 1 hour, and that break of structure is not valid in 4 hours. So if you're looking at those multiple time frames, you get yourself confused unless you have a trading plan that protects you from such confusion. So as you can see, we have our liquidity here. If you are looking at, is it not a pullback? This is not a pullback because this move is inside just this one candle. You can watch my video about how to identify valid pullback. So when you identify valid pullback, you'll be able to identify your inducement, your POI, and the rest. So this is how it is. So we're expecting the market to break this structure if this trend want to continue like this. So we're expecting another structure to be confirmed here because inducement criteria has been met. The previous low has been protected and we're expecting the market to do what? To break and come and take out this level to create another structure. But you can see that market is finding it difficult to do that. So but until market do this, until market change this character like this or break structure like this, that's when we'll say this trend has changed or this trend is still continuing. So if you want to go down to the lower time frame for each, we want to go down to the lower time frame, we can now mark the same structure in the lower time frame. We are not considering, what we are considering now is market supposed to go to the upside because that's what the higher time frame is showing us. We are expecting the market to come and break this level, but in trading, it's not about what you expect, it's not about what you feel, it's not about what you think, but we go with what the market is actually showing you in each of the time frame you are going to. So in one daily time frame, we are still bullish, but look at the structure in 4 hours time frame. So if I'm to mark 4 hours time frame, I want to use, let me use this red. As you can see, this is the obvious last break of structure that we had in 4 hours. We are using the same criteria. Inducement must be included for before we can confirm the break of structure. So I see we had a break of structure here because of this low. This low serve as our inducement. So it means that this level has to be protected in 4 hours. So now what happened? In these 4 hours, remember I said for us to confirm a break of structure or change of character, it means that the market has to, this is daily inducement. It means that the candle has to close above or below the particular structure. So, and as you can see, this first attempt market refused to close above here, below this level. So you can see that we had a sweep. So, and market reacted from this extreme after we had a sweep. But we are expecting the market to go up to come and confirm the same thing with the daily, like the bullish momentum. But what we see here is that market closed down. So this low now breaking below this sweep confirmed that we had a change of character in 4 hours. So this level we can mark it as our change of character. That's one of the signs that you will see if the market is trying to reverse or so. But based on what 4 hours is telling us, we had a change of character. So, and it's been confirmed by this level. So a lot of people will be confused that. So now, where is the high? Where is the low? Fine. A lot of people will say change of character here, and they will mark this high as their high because this is the highest level that the market pull back to the market breakdown. This is not a break of structure according to my plan because the market do not close. He only did external liquidity sweep of these 4 hours and market closed down. So as I said, it's all about my perspective. It's all about what I've seen happening in the market over the time. So, from my experience, I've been in this game for about a little bit up to almost 5 years now. So, I've seen a lot of things happening in the market. So, so I did not confirm this as break of structure. So it means that this high will be the high that I will reckon with. This high will be the high that must be protected if I'm going to look at the 4 hours structure. So then what next are we going to look out for? We look for our inducement. So where is our inducement in terms of 4 hours? When the market broke this level, market created another pullback. As you can see, we had a pullback like this, small pullback. Then market came down, then push down, no valid pullback. All these are just inside bar. So if I show you, you can see, just watch my previous video how to identify the valid pullback, because some people will say this is a pullback. No, you can see all these candles are inside this just one candle, so it's not a valid pullback according to my plan. So now where is our inducement? It means that this is our last pullback that we had in 4 hours, which is serve as our inducement. So when it comes to choosing the POIs, then where is the likelihood of the places that we can enter this market and so on. So, and I said we only have two valid POI that I choose. There are a lot of different way people choose their POI, but according to my knowledge and my understanding, it's only two valid POI that has high probability. The first one is you come to your extreme and you mark the extreme order block. First one, because we are not, this is not the extreme. The structure is like this. The 4 hour structure is literally like this. Market was going up, then we had a change of character, then we are expecting the market to go to extreme, then continue dropping. That's how the structure is. These are just SMT, smart money trap. So, and you will see how it actually work on the chart. Now that we had change of character confirm in this level, change of character confirm in this level, remember the red line is for 4 hour structure. So, and we had our inducement confirmed. It means that after market took out this inducement, it means that we had our low. We also have our low confirmed. It means that this is the next break of structure will happen. So now we have a trading range from here, from this level, trading range from here to this level. So, and the 4 hours time frame is telling us that this trend has changed, so we should be looking for sell structure or sell entry. So what are we going to do? Next thing is to go to our POIs. Where is our POI? Now, as I explained, if you watch my previous video, I explained how the two POIs that work, and we name it. The first one is the extreme, and the second one is the decisional POI. So the extreme is the last buying momentum, last buying candle before we now start having the market coming down from the edge, from the highest level, that like from this level that market got to before it now gave us change of character. So then if I'm to mark it, you can see that this is our extreme order block. This one, this is the last momentum that the market created. So now, and remember, you can also watch my video. I explain what makes this valid, why we choose the extreme order block, and the characteristics that guide it. The extreme order block must have fair value gap, and if I must to highlight it, you can see that we had a gap in between like this. So you can see this gap. These are fair value gap that the market left. So this is fair value gap. So then your extreme can also be your order flow. Your extreme can also be your order block. But what happens is, if it's going to be your order flow, I've explained order flow in my previous video, there must be an imbalance, unmitigated order flow. Then if it's going to be your order block, then there must be an unmitigated order block. So as you can see, then this is the first one, which is the high probability order block. And the next order block we are using is the immediate order block that is next after inducement. So let me say we are having a structure like this. and the market broke down like this and like this. So it means that we had a break of structure here, inducement taken out. Let's say this is our inducement. This is our inducement. Now our immediate order block above this inducement will be our second POI. Then the extreme will be our major one. So this is high probability, this is 50-50. So there's tendency that if this one fail, market will come to this level. So that's how you identify your POIs. So, and as you can see in this case, where do we have a valid pullback? This level, this level. We had a valid pullback here. So as you can see, market left this is the valid pullback for us. Then market did what? Remember, you must have a fair value gap. So you can see we had a fair value gap there. So now all our criteria has been met. I hope you guys are getting it. So all the criteria has been met. So as you see, when market got to this level, market failed because this is 50-50 probability. This is more of high probability. And as I said here, if the market failed this level, we have high chances that market is coming to this level. So from my experience, if I want to counter trade, then I will start looking immediately this level fail. I'll start looking for an opportunity to buy. So I'll just mark my structure maybe in 1 hour on the same time frame to this up. Then I'll find an opportunity to buy temporarily to this extreme. So, but for the sake of this video, we are not doing anything related to counter trading. So look at this. This is our extreme POI. You extend it and you see immediately this level fail. Market create another structure, came back for inducement, mitigate some fair value gap here, which is supposed to be our POIs. The market boom went up. So when I saw this over the weekend, I went during the week, I just put my limit order here because this 4-hour setup match all my criteria, despite the fact that daily setup is actually telling us to buy. But 4-hour setup also match my criteria. So what I do is, from my experience, I know that I only target 1 to 3. So I know that most times what happens is, even if this level is going to fail, it's likely for market to first give me 1 to 3 before it fail. That's why I choose 1 to 3 risk to reward, because even if the trend is going to fail off, sometimes if it's valid, market give me exactly 1 to 3 before the setup get fucked up. So as you can see, I had a trade still running. Let me show you the trade. So GBPUSD, I had the trade running, still running. So this exact trade that I took on GBPUSD, you can see the same setup, the same analysis. So that's it for GBPUSD. So once I hit 1 to 3, and I'm expecting the overall TP, overall movement of this trade to come and break this low. So if the market come down, if I add 1 to 3 to this level, then I can extend my TP, but I'm only taking 1 to 3. So when I get 1 to 3, I close my position. Then maybe if I see more opportunity, maybe market do something like this and still push back, give me opportunity, then I can still sell, because it's telling me that this is coming to this level, so I can sell towards this level. So that's it for this video. So I don't want to go back below this because 4 hours and daily time frame has tell us all. If you go to 1 hour, you will see that for 4 hours to give us change of character, it means that we will have had a lot of we have had change of character in 1 hour too, that will be pointing towards the direction of 4 hours. This is how you need to, this is what you need to understand. If you are doing your top down analysis, if your daily top down structure is going to fail, or let's say it's going to change the momentum, the lower the time frame, the faster you start seeing it. Let me use 1 hour, 4 hours, and daily. If you go to 1 hour, you will definitely see that you've had change of character towards to that level, that the direction that the market wants to change the momentum. Then next thing is 4 hours. Once 4 hours also give you that same direction, it's high probability that it's likely for that market to want to reverse in daily time frame. So, but if the market want to go up, it means that the 1 hour sign reversal pattern that is giving you, or the reversal signal that is giving you, and the 4 hours is just going to be temporary. So this is what I'm looking out for in GBPUSD for this week. I'm expecting the market to come down and probably break this structure. And once the market break this structure, it means that in daily time frame, 24 hours. So it means that in daily time frame, if the market break this level like this, it means that in daily time frame we also have change of character. Then we'll be looking for the confirmation, then selling again. So that's when we start selling in this direction from the higher time frame to the lower time frame. So there is the analysis for GBPUSD, looking at it from daily time frame and 4 hours time frame. So bye for now. If you have any question, you can drop it in the comment section. I'll be glad. And you guys should like, subscribe, and probably share this video if you find value in it. So thank you guys. Bye for now.